Back time now for the Money Manager. Tonight we talk about the JSE, not the performance of the JSE, but the performance of the JSE in terms of volume, derivatives volume and traditional volume. In the studio in Johannesburg is Donna Oosthuyse, who's the director of the JSE Capital Markets. Donna, I was looking at the market yesterday. I haven't seen today's volume, but I saw the volume yesterday and it's 20 billion plus, and the day before was 17.19 billion. And I thought to myself, this is not futures closeout day. This is just a normal day at the beginning of a year when we would expect maybe 11 or 12 billion. What on earth has happened in the last few months?
Well, you're quite right, Lindsay. We have seen a very important increase in both number of trades and on certain days value traded. We did see a lull in the market, relatively low volatility towards mid-year last year, though in June we had our peak day of trade on the derivatives market. But towards September we had the highest number of trades we've ever had, 395,000 trades on the 16th of October. And then into December, we had on the 18th of December value traded of almost 54 billion rand. It was a futures closeout date as well, but there were other factors that were driving that. And among them, again, is the renewed volatility in the market, concerns over macroeconomic trends, the slowdown in growth in Europe and Japan, quantitative easing that's been implemented in Japan, continued strains in Russia and the Ukraine, and of course most recently the impact of what's happened in France. And of course we've seen in very important pressure on oil prices that earlier this week trickled over into the copper market. And of course today we've seen a very important surprise announcement by the Swiss Central Bank removing the cap on their exchange rate versus the euro, and their currency has appreciated by around 15% so far today against both the dollar and the euro. So this uncertainty in the market is leading to volatility, leading to increased activity on the exchanges. But for us in South Africa, we've benefited, I think, from some of the turmoil that's happening in other emerging markets. And whereas one might say that this increase in activity may not be consistent with what we've seen in our own domestic economy, you know, a lot of the other emerging markets are experiencing worse difficulty than we are in South Africa. And in fact, last year we saw a net inflow of funds from foreign investors into our equity market to about a level of about 14 billion rand versus an outflow in 2013.
Yeah, this is very encouraging stuff, of course, and what I would say is that it's just occurred to me that with the liquidity in the JSE increasing all the time, we become the sort of go-to emerging market if people need to either get in or get out of emerging markets. So the JSE momentum then feeds on itself, I suppose.
That's a very good point, Lindsay, and we see that also in the currency market, in the rand market. It is one of the deepest and most liquid currency markets in the world, and we often see it being used as a proxy for other markets. So traders or investors will buy or sell the rand if the currency that they're invested in is not as liquid, or if they want to make a very quick decision. The same thing we see, I think, now in the equity market, where South Africa and the JSE has become a proxy perhaps in two ways. One is investors wishing to invest not just in South Africa, but following the Africa investment theme, are buying into South Africa, particularly in our stocks and our counters, where those companies have a significant portion of their earnings coming from other African countries. So we see that in MTN, for example, with a significant portion coming from the rest of Africa, and of course Naspers, with a significant portion of their earnings coming from their investments in China, Eastern Europe, and other places. So I do believe that investors are looking at South Africa and our equities market because it is deep, liquid, well-regulated, and our currency market likewise is deep and liquid, but also because they can buy themes and diversification opportunities in our market without having to go into other markets and experience the execution risk or the currency risk of those markets.
Exactly, and of course your downtime, which was at one stage a bit of an issue with the brokers and investors, has virtually disappeared now, which is a very good thing. Let's quickly get back to basics if we can and have a look at the JSE equity market itself and tell us about the volumes there and the new listings. It was quite a good December, I think, a lot of property listings.
That's right, Lindsay. For the year, we had 24 listings on the JSE. It's the first year since 2008 that we've had over 20, so that's the first year since the crisis that we've had over 20 listings on the exchange. 8 of those listings happened in December, and there was, as you mentioned, a preponderance of listings in the property sector. Property is a very popular investment theme with South African investors, and the property companies that listed in our market, many had assets in other markets, such as Europe and some in the rest of Africa. And investors are looking for a return based on a foreign currency denominated asset where they can hedge themselves a bit against rand exposure, but also get some annuity return and yield based on the rentals and returns in some of those other property markets.
Go to derivatives now if we can, because in the old days when I first started on the SAFEX, I actually got my SAFEX exam, I think, at about the 15th attempt. But it used to be the Aussie, the Indy, the Goldie. What's the most popular one now?
It's still the Aussie. Our index future is still our most dominant contract, and single stock futures. This past year, we didn't see a lot of interest in options, interestingly, and that's because for the bulk of the year, volatility was way below the 10-year norm of 20%. It was almost half that. So we didn't see much interest in options, but coming into this year, we're expecting, with volatility so high, we are expecting interest in options to return.
Derivative futures, 23% increase I'm reading here in value traded for December. Now, tell me how much of this is all to do with high frequency trading and algorithmic trading, and therefore as they trade a lot more, then they have to hedge against that with options and derivatives. And again, as I said earlier on with the momentum story about the JSE being the go-to place, the momentum continues with increased volumes as hedging has to take place, if you see what I mean.
That's right, Lindsay, I agree with what you're saying. And well, we did, as you know, open our co-location center in May of this year, and so far of the 35 racks that we have built, 18 have been taken up. And since August, we've seen a significant increase in global players coming in, either directly or through our large broker-dealers that are in the colo center, executing trades. And so we've seen the number of trades increase by about 16% in 2014, where the value traded for the year was up only about 2%. So the average size of trades has declined. So I think a lot of that is due to an uptick in high frequency trading. Although we still see our order to trade ratio in very healthy range, so I don't think that we're suffering from a preponderance of that, but there certainly is an impact. And we're seeing it in the cash market, as you say, but also in the derivatives market. And in addition to the statistics that you just mentioned in terms of the 23% increase in value, we saw a 67% increase in open interest, and that's very reassuring.
If you took the 20 billion we had yesterday on the market, can you give me any estimate of how much of that was attributable to the algo or high frequency traders, just to give us an idea of how this particular phenomenon has burgeoned over the last year or so?
Lindsay, I don't have a breakdown specifically like that, but what I can say is probably about 10 to 20% of our trades are coming through the colo center. And I would say a significant portion of that is algo-based trading.
Looking at the markets that are not regulated by yourself, there's a proliferation of them as well, and there's some bespoke products that are written specifically for a certain type of strategy, and that of course boosts your trade as well, because again there has to be a hedging aspect. Have you seen a lot of that becoming prevalent recently?
There's a great trend globally towards passive tracking. South Africa, as you know, is primarily an alpha-based market where there's an awful lot of and there's a whole ecosystem around stock selection and so forth. But there has been this growing trend globally, it's been quite significant, into passive tracking, not necessarily just tracking indices, but tracking certain themes of investment. For example, stocks that have high dividend yields or stocks that are concentrated in a particular sector. That's an area where I expect to see significant growth in South Africa over a period of time. It may not happen immediately, but over a period of time I expect we'll see that. We have seen an increase in listing of ETFs and ETNs. We had about 12 total last year, and I expect that we'll see more of that coming this year as we see more inflow globally, and this theme becomes more prevalent in our market as well. One of the things that we did
What's
see
the future?
in addition to that is in our derivatives market, as you were mentioning, we saw an increase in what's called our IDX futures. And these are futures contracts that are based on offshore assets. So we have an IDX on Alibaba, we have an IDX on Apple, and we saw a very important increase in the last couple of months of the year. We saw an increase in interest by investors in those IDX future products.
So to summarise, Donna, would you say then that the future of the JSE and the JSE derivatives department in terms of volume is to do with two things? Number one, innovation from yourselves and from your clients, and also the volatility in the markets, events like the Swiss National Bank cutting the peg to the euro and the gold price spiking to $12.56 an ounce, and terrorism, heaven forbid it continues, but you know what I mean, geopolitical risk. Are those the two things that are going to drive the market?
I think those are very important drivers, Lindsay. I would agree with that.
Donna, thanks very much for your time this evening. That's Donna Oosthuyse, who is a Director of Capital Markets at the JSE.